Yeah, we've definitely seen some evidence that more and more people are getting interested in NFTs. You can see that even though the price of NFTs over the last 7 days, based on our watch list here, which includes most, but I'm sure some of the newish NFTs that have just recently come out, they may not have been added to our platform yet. But through the ones that we have, they're down a combined average, I should say, 6.05% in the last week.
Hey everyone, welcome to another episode of the Collective Shift podcast. I have Brian here from Santiment coming in from California. How are you, Brian?
Doing great, Ben. Thanks so much for having me.
Thanks for coming on, man. So today we're going to get into all things sentiment around crypto, Bitcoin, macro, might even touch on some NFT, Metaverse stuff as well. So super excited to get into the platform. Brian, do you want to give us and our members a bit of a rundown on sort of your background and what you do at Santiment?
Yeah, absolutely. So I am the director of marketing. I also do a lot of the content and Twitter posts that you'll see up on our Twitter feed, which you can find at twitter.com/santimentfeed. We make insights about anything from on-chain utility to fees of certain assets and how that's affecting markets, whale behavior, sentiment behavior, average trading, returns at any given time, basically all to give as much alpha and insight as we can into where markets are going to go next with objective data-based metrics and charts on our side. We have no biases, we don't shill coins. We simply look at which trends are out there and what is relevant to the community and try to focus in on where things will be going next. So that's what we'll be doing a bit today on this video.
Awesome, man. And can you give our members a bit of a rundown on how the platform actually tracks sentiment? I know you've given me a rundown in the past. It's pretty cool where you sort of plugging into a range of different platforms. Can you just give us a rundown on how that actually works?
Yeah, absolutely. So the way we look at our social data is through automated data scrapers that look at 5 different platforms. They check out anything public on Twitter, Discord, Telegram, Reddit, or some pro traders chats out there that we have a little bit of access to. We take all of this, put it all together, essentially blend all of that data, and it gives us an output on just how often a certain asset is being talked about. And we have a proprietary algorithm to look at whether or not that comment is extremely positive or extremely negative or anything in between. Usually kind of looking at it from like a 0 to 100 scale with certain words and types of posts that are common being dubbed as super positive, super negative, etc. So through that, we're able to look at how often something is talked about combined with what the positive versus negative sentiment is toward it at any given time.
Yeah, that's awesome. So pretty much, it's hand in hand with something like on-chain analysis where you can see that where the money's moving on-chain as well as how people are talking about assets combined. I think you can give investors a really good tools to see where the market's going. So let's jump into the charts. Brian, Bitcoin specifically, what are you sort of seeing where we are at the moment in terms of the market cycle and what's the sentiment looking like?
Yeah, absolutely. We've obviously been in a bit of a downtrend from a macro perspective since mid-November, right? When we hit our all-time high of a little above 68K on the 10th where I am, I guess the 11th where you are. And we have seen that circulation, the amount of unique tokens that are moving on the network, are mostly staying the same, while the actual price is being essentially pummeled. And so that's actually a bullish divergence because circulation tends to go down if price is going to go down, and it moves up, as you would imagine, if prices are moving up. So NVT wise, which essentially measures the amount of coins versus unique coins moving versus the current market cap at any given time, it's showing a bit of like a semi-bullish signal right now. And that tells us that we are in a safe spot for prices to recover, and it would be justifiable based on the amount of unique tokens that are being moved. Now, we can also measure that by the amount of unique addresses that are interacting on the network at any given time. Daily active addresses here. This measures, like I said, unique amount of addresses, and it also is staying pretty flat. We can actually put on like a 30-day moving average by just clicking indicators here and then enabling that. And you'll see this pink line here shows that there's been just a very modest trickle down on the 30-day smooth moving average scale, but it's still well above where it was 6 months ago in August when we were getting an average of around 830,000 Bitcoin or so moving per day. Now we're actually around 930 to 940K. So looking pretty decent. Ideally, we like to see 1 million or more as the magic number to signify that a bull run might be beginning again, at least in the range we're at right now. And we did have 3 days in a row here with over a million. That was the first time we had seen that of 2022. So that was a good sign there. So far this week, it's looking mostly pretty mediocre right now. So we're going to wait and see if utility picks up a little bit. But on the utility side, it's looking average to slightly better than average right now. So that's a nice sign. Now on the sentiment side, as we talked about, this chart measures both the volume, the overall amount of mentions of Bitcoin or the hashtag BTC anywhere on these social platforms that I mentioned. Right now, we peaked at seeing the most mentions of Bitcoin just as things were beginning to plummet in early December. And since that time, social volume really hasn't really recovered. It's overall up a little bit. So I can zoom out and just look at like a 7-day trend. So this is just 1 week at a time. And we can see that the social volume really peaked right there as prices plummeted in early December. And now it's mostly flat. So not really anything special. Ideally, we want to see the overall percentage of conversations related to Bitcoin trickle up over time. And that is what this pink line is for. So the pink line is showing the, like I said, percentage related to Bitcoin versus other assets, particularly in the top 100 that we track. So if I zoom this out to the last 7 days, we can see, I'll even make it a little colored in there, we can see that it bottomed out right before the big plummet. And that's pretty typical. Typically when social dominance starts to wane, I should say, and altcoins are kind of getting the most attention, that's a sign that a top is near because not enough people are paying attention to that number one asset in crypto that keeps all other projects propped up and able to thrive. So when we see this, a big plummet, that's telling us that the markets are not very healthy and the too much attention is being given to abstract altcoins and meme coins or even Ethereum and projects that don't carry quite as much weight on how the rest of the markets move at any given point. So we saw the big plummet here as dominance was really dropping, slight uptick, and then look, it dropped right back down because everyone was paying attention to altcoins once again. And now finally, we've been seeing this uptick. You see how dominance actually had its best week since late October in late January, right as it was bottoming out. And that was a sign that things were probably going to turn around. That's been what's happening so far. And we're staying relatively flat right now. We would love to see dominance start to get back up here above 20%. But right now it's sitting around 17. So it's trickling up there, but not quite where we'd want to be. I'd call this mostly a neutral signal right now on the sentiment side. And I know I've said a lot here, so Ben, feel free to jump in and let me know if you have any follow-ups on what I've shown.
Yeah, no, this is pretty epic data, Brian. I'm interested to hear your thoughts around, in the past 2 or 3 years, there's been usually what happens is sort of Bitcoin has its run and then, attention and capital rotates into Ethereum and the altcoins. With the introduction of NFTs in the market over sort of 8 to 12 months, are you seeing capital and especially social attention and retail audience start to change their viewpoint or perspective and start to just focus on NFTs and even newcomers into the space? Like I feel as though the retail audience that we've had in the past coming into altcoins has actually gone towards NFTs.
Yeah, we've definitely seen some evidence that more and more people are getting interested in NFTs. You can see that even though the price of NFTs over the last 7 days, based on our watch list here, which includes most, but I'm sure some of the newish NFTs that have just recently come out, they may not have been added to our platform yet, but through the ones that we have, they're down a combined average, I should say of 6.05% in the last week. However, volume is up. So they are being traded more despite the mild plummet in the last 7 days. And we can see, especially at the top, the top 58, at least I see 36, 41, 47, 58. these high-end NFT related assets, they're seeing big pumps right now in volume. And they seem to be the culprits in why volume is actually moving up and not down, despite price moving down over the last 7 days. So Decentraland obviously has had a pretty nice run. If you've been following it since the new year, it's really been trending upwards in large part due to its correlation to Metaverse and some other things. It's been around for a good 5 years or so. I remember hearing about it when I first started learning about crypto in 2017. Um, Sand is also getting an uptick. Axie Infinity, Flow. These are projects that have been around the space for a while and seem to be getting some greater and greater traction in the NFT space and overall crypto space.
And back to the altcoins, Brian, do you have an opinion or perspective on over the next sort of up and coming 12 to 24 months? Are you thinking some of the lower market cap altcoins, some of the higher risk plays that in the past have been pretty attractive for the new investors, will continue to see that sort of user uptick and growth in terms of market caps, or do you think the attention's going to go back towards the top 20, top 100 assets?
Yeah, so as far as timing goes, I personally don't pay much attention to like in X amount of months things are going to be turning around. If it was that simple, all the big whales would just jump off ship and jump back in 2023 or 2022, whenever they all just assumed that prices were going to pump. It's more so based on kind of the self-fulfilling prophecy that crypto creates for itself. When the community at large is all deciding to put in more crypto, more money into crypto, that's when prices go up. If it's utilized more, and Ethereum or Decentraland or any other asset is suddenly being circulated at a much higher pace, that's when prices will tend to go up. So on a 12 to 24 month perspective, there will likely be plenty of cycles where there's another run at an all-time high, another run at dropping below 30K perhaps. I'm obviously not going to give investment advice. That's not what we do. We just show what the metrics are stating. And usually within 1 to 2 years, you'll see all sorts of full cycles going on with how fast crypto is moving. For the immediate future, we're seeing probably a little more of a bullish divergence than bearish, but a lot of that is based on what the whales are doing, which I can get to in a moment, as well as like funding rates. How many people are greedily leveraged longing or fearfully leveraged shorting right now in the markets. And we actually have a model for that exact thing here. This shows the average funding rate for Bitcoin across 5 different exchanges. That includes Binance, FTX, DYDX, Deribit, and BitMEX. So all 5 of those together give us a funding rate of 0.0025 right now. And you can see this graph is separated by longing versus shorting. The higher up it is, the more longs are occurring compared to shorts on the funding rate. So that ratio is higher toward the long end. Typically, we see the biggest price rises when there's a ton of shorting going on. So for example, even though blue, which is representing Bitcoin, was in the red zone and showing some slight longs, purple, which is representing the average altcoin funding rate within the top 150 or so altcoins, they've all been in this bullish area because people were trying to short them as much as recently as a little over 24 hours ago. Because altcoins have been rising, look at how the altcoin funding rate has actually gradually moved all the way into the red zone. And now altcoins are actually beginning to fall again. So funding rate is a really nice key component that we look at to give us some insight on where markets are going to move for the immediate short term. If you're talking more long-term metrics, I'd be happy to show you one of the key ones that we like to check in on. So I'm going to show you let's go 7 years back. We'll go all the way back to 2015, and we'll look at a metric known as mean dollar invested age. Now, what this is showing is the average age in which invested Bitcoin has been sitting in that same wallet since purchase. So when a fraction of a Bitcoin is purchased, or a full Bitcoin, whatever, it starts as 0 days because it's just been purchased and is brand new to that address. As it sits in that same address, things begin to become dormant. And what this line is showing is the average age of all of those coins sitting in their respective wallets. And when it goes up, like I said, that's when stagnancy occurs. It's a sign that Bitcoin is not quite circulating and moving from wallet to wallet the way we are hoping when a bull run starts. Now, on the contrary, look at a big dip like this, like the one that started way back in October of 2016, and the mean dollar invested age was sitting at around 447 days, and it dropped all the way down to just 64 days on average because there were so many new investors coming in. The average age was plummeting due to so many new addresses interacting. And during this time when the line was falling, look at what happened to the price. It was just absolutely skyrocketing. And similarly, we saw a mini one that happened here in 2019 that was kind of signifying that there was some dormant tokens. However, it quickly started moving back up. So people changed their mind because prices were moving back down. There was a little bit of a run, but right here when things flattened out, that was an indication that it may not last, and things started to immediately go back up. But more recently, beginning in October 2020, we can see that the mean dollar invested age absolutely fell off. And that's exactly what we needed to signify that a bull run was beginning right about here in mid-October 2020. That's when things absolutely went nuts until things flattened out a few days prior to that first all-time high here. And as soon as it moved up, guess where prices went? Right back down because things suddenly became dormant again. So as of right now, we aren't really seeing any signs that there's a huge dormant token movement. And the mean dollar invested age line has continued to grow. That being said, it's not like at a crazy 400 plus day range like it was in July 2020 or way back in 2015, 2016. So long story short, this would be kind of a slightly bearish sign for the long term because there isn't quite enough dormant token movement happening to imply that the next bull run is right around the corner.
Yeah, and at its simplest level, Brian, what I see here is, the retail investors coming in at the exact wrong times, and that's what pushes a bull market. It's new participants, new cash, new money coming into the ecosystem, which isn't the time to start investing. The time to start investing and time to build your portfolio or your assets is when there isn't the attention there, where it isn't in the crazy hype of a bull market. Like it's sort of now, and ever since sort of December, like this is the period where you should be accumulating when it's boring, and getting yourself prepared for those periods. So that's a really interesting chart, Brian. If we could rotate over to one of the biggest requests we have from members is around gaming and yield and income generating assets. What have you guys seen in terms of the games that are coming out at the moment? I'm hearing people that are matching their salary, daily, everyday job salary in games that they're playing. Like, have you seen a real change of or an increase in the amount of people that are coming and looking at these sort of assets and games and playing them?
Yeah, I mean, a little bit. We've definitely seen assets like the Sandbox, Axie Infinity, Gala, Engine. They've all gone on pretty nice runs to start off the new year, mostly independent from one another. We can take a look at one, for example. I've mentioned Decentraland a couple times, and it's been a really fascinating asset for us to watch. So if we look at some of their metrics, particularly their whale addresses and what they're doing, we can scroll down to whales. Their price, the asset's price is currently sitting at $3.30. And we typically look at whales beginning around $100,000 up to around that $10 million mark. I know that's a very wide range, but that kind of gives us a good large sample size of what some of the largest addresses, actual active addresses, are doing, without kind of looking at exchange addresses that can provide a lot of noise that isn't really helpful. And if we look at the last year, take a look at how much accumulation these addresses that currently hold anywhere between 310,000 all the way up to about, I believe, $31 million in mana. There was this huge spike that started right here in late October, And someone else told me on our team that it was related to mana being introduced to or being associated with some big game. And the accumulation was just massive. And then a few days afterwards, that's when the big price spike occurred. So we were actually watching what the kind of accumulation was looking like right here around the 25th, then we would have been very handsomely rewarded on the 28th through 30th. And they've done more and more accumulation ever since. That being said, they did start to take a little bit of profit here to begin February. So that's something to keep an eye on, but it's still, relative to where it was, they own 35.5% of the supply now, and they were sitting at 26.1. So they added about a little over 9% of the supply just in the past, call it 3.5 months, and that's pretty significant.
It's pretty unbelievable. So you basically have, and even the big jump back, I can't quite see the date there, Brian, but the big increase we had on the right-hand side of the screen there, we can see the increase of the whale holders. There's probably like a 3-day gap between them accumulating, which is basically like a vertical line of accumulation, 3-day gap before price increases. Like that's some serious sort of data that you can grab before price movement moves up and actually action on that.
That's for sure the alpha that our community loves to have, because whale behavior, usually there's a bit of a delay between them accumulating or them dumping and then price reacting to it. So we love looking at what the top key stakeholders of any asset are doing at any given time, because it can be such a nice leading metric that kind of gives people an insight as to where markets are going next without having to look at support and resistance lines like a lot of the TA traders out there do.
Yeah, awesome. Okay, well, I think that's a perfect sort of runway into what you guys are doing at Santiment, the product you guys have, and how it can help crypto investors. So, Brian, over to you to maybe just walk us through what you guys, from a product perspective, can help our members.
Yeah, absolutely. So we offer all of this data for 1 week for free if you make a Santiment account. And then after that week expires, you can opt to go back to the free version. With the free version, you will see a 30-day lag on our data. So take that for what you will. It may not be the most helpful, but can still give you some insight. Or you can become a pro member by going to our pricing page here. And it can be either $49 for a month, or if you do a full year, it's only $44 a month. Or you can even go to Pro Plus, which gives you full API access and private chats with our staff to help you with markets, market insights, and all sorts of things there. So we have this, either of these options. And then we also have the coupon code, which I made just prior to this call, called Collective Shift in all caps. And if you enter that at checkout, you'll get 25% off your first month. So a nice little discount for you there. And quite genuinely, we have a great Discord server, whether you're a free member or a paid member, where we constantly talk about the markets and try to figure out, what kind of alpha we're extracting for that day and how we can react to the latest pump or dump. And we have tremendously useful conversations that anyone from the Collective Shift community is more than welcome to check out. Ben and I talk all the time and try to figure out what's going on there. And we plan on doing that on many more of these calls with you. And we just want to try to make the perfect product that you guys can get behind and kind of understand clearly with a quick snap of the fingers, like this is where markets are going next, or this is the most likely scenario based on, the bullish or bearish divergences that we're seeing right now. So I highly encourage you guys checking it out. Whether you want to be a paid member or not, it's just a really solid platform that I feel really privileged to get to show off to you.
Yeah, awesome, man. And as you said, you can jump over there for a 7-day free trial and check it all out. So, Brian, that's been super helpful, mate. Thank you very much for jumping on.
Thank you, Ben. Always a pleasure, and I'm looking forward to many more of these conversations.
Yeah, me too. Thanks, guys.